Very good morning, everybody. Welcome to Trade Live with IG on the 17th of December. Angeline.
I know, old school remix. This is great when we get to come on live. And for those of you watching as well, it was so lovely to see all of you at the NFP special yesterday.
It was good fun.
Yeah, I was outside, but thanks to Rich and Piers, it meant that I could actually trade real time as you were in there.
Well, that's the thing. There's so much more action, obviously. When you go with the open of the London Exchange, then it's like, oh, okay, do I buy a little bit of Whitbread? Do I short some Rios? But the US Open, everything's
It just goes bang, right? Yeah. The UK almost has a bit of a moment before everything starts, moving. Good morning, Friar Tuck's Heavenly. Each time I see your mantle, it gets more and more elaborate. Julian, good morning to you as well. Wing It, Derek, Jugga, and of course, London Guide and Maturin and Gavo, 21. Are you 21?
Right, let's have a look at what is coming up on today's show. Well, we've got Angeline and myself through to 10 past 8 when we're going to guess one of those wonderful charts from producer Phil.
Ooh.
Then Double Aaron is coming. We're going to have a little bit of a debate because I want to hear Aaron's thoughts for next year. We know that they were aggressive bullish coming into this year, and it's done them well in the end.
It has done them well. And also, interestingly,
not so much in April, but
yeah, they stuck to it. Later on in the show as well, we've got from the commodity side of things, John Mayer to give us an update on GGP. Those of you that saw GGP and had a position last week, well done you. Double digit there, I believe I'm correct in saying, Andrew McKilvey. And also we've got Julian Wheeler coming up to update on what is going to move next after we saw that huge move in Dominion and also Alcoa. And he's also going to tell us what 2026 is looking like for US stocks for him.
I don't know who has given the best call of the year. Is it Julian or is it Graham Dixon?
Oh.
6-7.
Yeah, 6. I still don't know what that means. Do you? Can you tell me?
Everything. Right, and then Friar Tuck saying the NFP show was great. More of that, please. We've got a special message coming up at around about 5 past 8 as well on exactly that. So Friar Tuck, thank you for dishing us up. But there are some interesting and very beneficial numbers out this morning. So let's go into overnight action and look straight at those. That's right. It is. If you've got a mortgage in this country or you're looking to remortgage in the near future, then you should be a happy bunny this morning because inflation coming in much lower than expected, 3.2%. Core inflation rate versus 3.4 expected. The headline even better at 3.2 versus 3.5. And negative month-on-month figure. That is going to send down expected interest rates in the UK in the near future. The currency also moving. Currency's come down a lot, Ange. That is straight down to 133.
Yeah.
31 now. So straight, I was in Pret getting my coffee when it number came out, bought a load of FTSE and sold cable straight away. And so far, so good, because the FTSE is looking up 70 basis points.
Nice. And as you know, I also have a position long on the FTSE, both because I thought this might happen, but also Bank of England and the fact that we could be, if any of you have read Chris Beecham's Santa Rally, why it's more of a British thing rather than a US phenomenon, we could, from my opinion, for the FTSE, see a bit of a leg up just in the end of this year. What's interesting? I know we need to use those hats. Where are the hats that you made? Where are they? We're taking them to the podcast.
We got it sitting in the podcast ready. But you can see where I managed to get it in this morning. So 9727, now 9751. I think this, because we know we're going to get a rate cut tomorrow now. Right, that guarantees us the rate cut, in my humble opinion. But it's on a technical view, that is is that a cup and handle?
It looks a bit like a cup and handle. Yeah. I'd like to see a close above. Yeah.
So there we go. 10,000.
Yeah.
If we follow that line, then we'll be 10,000 on the 16th of January.
Yeah.
Let's say my birthday.
Yeah.
11th of January.
Not quite the end of the year. Not quite the end of the year.
No.
But interestingly enough, the everything in the food and non-alcoholic beverage bit, especially bread, cereals, cakes. You guys haven't been eating enough cakes and biscuits. They fell. The prices of those items fell. Alcohol and tobacco. Also the lowest since December 2022.
And I think services came in light as well.
That's right. Eased to 4.4%.
Really, really good, beneficial, and not. This isn't just a short-term trade, right? This, I mean, I haven't even hedged it. I'm just naked long
Let's
game.
put up my charts. Yeah.
Yeah, there it is, 3.2, perfect. So yeah, I'd say FTSE. If I was going to hedge, it would be the S&P continues to feel very heavy. So, or do you look at something in Europe maybe? But yeah, naked long, FTSE 100 to
Unlike
10,000.
you to have a naked long or naked anything.
Playing the long game, Andy.
Andrew McKilby, good morning. Enquest operational update says production will be at or above guidance. Thank you very much for that. Right. So, very interesting time we've had over the last few weeks. We've been asking all of our valuable guests about 2026.
Yes.
And what they learned in 2025. Rich and I have had to do that too. I'd like to hear yours because I missed your recording. So what did you learn in 2025 and how will that change or impact your investment or trading style in 2026?
Your conviction positions, right, go against you for longer than you can ever imagine, but then you come right in the end. Okay, so I've been long in April, right, and it looked horrific, but as long as you can absorb that pain, then you're all right. I was then short short calls for the last 3 months, a bear, as we went from 6.6 to 6.9.
6.7. We're going to like
Yeah,
it.
6.7 again, yeah. And so those have really paid off really nicely in the past month. So I think just being more calm, and the only way to be calm is running the right size. So if you are going to go contrarian to the market, then you've got to do it in the right size. So you can add a little bit and add a little bit. And then just as you think it's going to turn, it will probably go for another week or two.
There you go. Tom Roberts, if you're watching, position sizing. Tom Roberts is a very, very much a Munger kind of guy.
Terence has just said in my ear, his big lesson of the year is to run Vodafone longer. To be longer and run it for longer.
My lesson this year as well, and trader friends, thank you so much for being with me on this journey. What a journey. It's not just about conviction, but and having that conviction, and you hear me say biting on a stick when it's going wrong, but knowing that you've done your homework, it will come good. It just takes, as you say, longer than usual.
Yeah.
But also, it's a bit like rowing or shooting uphill on rapids with a broken oar and having to pivot continuously. So having to pivot into industries or sectors that you're not normally a player in that. So by that, I mean, I'm very much a tech investor and tech trader, but I found that space too volatile for my...
Yeah, and it went out of vogue big time in the start of October.
So now if you looked at my portfolio, you'd think I was always a commodities trader.
Guru.
But it is linked to tech. It is linked to tech.
Right, was just seeing Andrew McKelvey talking about Games Workshop there, announced another dividend, bringing the total this year to 3.75. So there you go, an extra 50 pennies for you if you are a Games Workshop. This thing just continues to pay, doesn't it? Look at the chart on that over that's year, not quite year to date. Let's go back a little bit further.
Go left, go left.
There's your year to date. We started at what's that? £133. Now up to £196. That must be one of the best returns.
I know.
In the FTSE.
And
it continues to do it.
It's like those board games and those, what do you call the ones? I don't play them. Where you dress up and you go to someone's house and Dungeons and Dragons, that sort of thing.
Oh, Ange.
But you know, board games have been resilient. They've been absolutely resilient whilst the whole toy market's been slammed, right?
Did you read about the guy who was going to, I think it's Comic-Con kind of thing you're talking about, is it? So there was a guy going to Comic-Con and it was at the...
Character playing games.
Yes.
Yeah. What about this guy? Role playing, thank you.
So, yeah, he was going to Comic-Con on a Saturday afternoon and it was Chelsea versus Fulham. Mm-hmm. And he was dressed up as a policeman with a big backpack on, which is apparently one of the Comic-Con characters. But they saw him going into a crowd of people and they took him down.
No.
And it was a 16-year-old.
Was he hurt?
No, it was the cops that got him and they arrested him and they took him in and, you imagine him going to Guantanamo Bay kind of thing, like with a fake police badge. But he had a gun on him. But it was a toy gun.
A toy gun.
He had painted it.
Oh.
So, But a poor kid, like I think he was just, scared to death. But I'm just going to Comic-Con. Just leave me alone.
Jugger is laughing. Cosplay is not Dungeons and Dragons. You know the role-playing games where you throw dice that have more than 6 sides.
I think it's just time to move on.
Right, here we go.
Have a look at the newspapers this morning. So we got DiCaprio there to talk about UK inflation. Oh no, he's talking about Warner Brothers set to rebuff Paramount. They don't think that Paramount's the right suitor for them. So that might be a little bit of a relief for Netflix shareholders, which has been hit quite hard on the back of this.
What do you think of the OpenAI George Osborne story?
Well, there are two OpenAI stories. That is one of them. There's a better one in the FT, which is Amazon in talks to invest more than 10 billion. Now, this could be one of the reasons why Oracle was so strong yesterday. Because, of course, if OpenAI survives and thrives, then Oracle share price could be double from here.
And we had someone on the chat asking about Oracle earlier this morning. Who was it? Andrew McKelvey? I don't have the chat button. You've got the chat button over there. And there is obviously, No, it was Senseo asking about Oracle. Well, it depends very much on, like what Rich was saying earlier on, how your conviction and how long you can wait this out for, because Oracle, as we know, has had a bit of a rough time recently.
Yeah, it's all down to whether these data centers are needed, are profitable, and are done in a timely manner. And Oracle is positioning itself to be hugely leveraged into AI and data centers. So this 10 billion that's being invested from Amazon into OpenAI definitely adds to this idea that this story's around to stay, and all the panic around Oracle could well be overdone.
And Sincere, don't forget, keep an eye on the technicals, because we are approaching a very key point there. As you can see from the rectangle I've drawn here, which shows you the area of interest. If we break past that, and we could potentially fall to the 15902 mark. We have seen this time and time again. We talk about, not catching falling knives. Obviously, if you're short, this is a very shorting Oracle. This is a very interesting chart for you to look at. I wouldn't take a position until we clear this area to see whether it bounces back or it breaks below.
So what's the potential path to the upside? So then if it does hold that?
Potential path to the upside, the next area of interest will be where we saw that 10th of December high, that area. And if we bounce off that and close confidently above, we're coming up to Friday soon as well. Always look at the Friday close, and also it'd be good if we saw a surge in volumes to confirm that. But what I'd really like to see, you know, Ange likes her EMAs there. I'd like to see the nose of this price action start to peak above all of my EMAs there, which are 20, 50, 100 and 200.
It's good questions there, Sensei. I don't agree 10 billion is not a drop in the ocean by any means, because Oracle's funding needs are, you know, 30 to 40 billion of additional funding needed. That, you know, that all dissipates the fears. And so for OpenAI to be given 10, right, it's not just about the 10 billion, it's also about the agreements made with Amazon. You know, Amazon are doing further deals with data centers with OpenAI. And it's certainly the first bit of good news that OpenAI's had in about 2 months. You know, and since all those circular deals, you know, I think this is most definitely a positive for the general feel around Sam Altman and the company. Then the chip depreciation argument, is it 3 or is it 6? You know, it was probably somewhere in between, isn't it? But what it's not is 2. So the argument has already been the very early stage chips, where are nowhere near as good as NVIDIA's current ones, are still being used into their 4th year. So why would anybody be able to predict the future in 4 years' time that Blackwells can't be used for 4 years?
Yeah.
You're not going to find out for at least another 2 years. And that's the reason that I think Oracle has a great 2026, is because you don't have any funding issues in 26. You don't have any funding issues in 27. It's not until 2028 that Oracle starts to need that additional funding come in. So by that point, we're going to have a lot more clarity on.
Exactly. And that is also the reason why Blaney's going to kill me, but I'm going to say it again on air. I think Bill's call is correct and is right to be cautious, but I think he is 2 years too early. Like Rich said, it's really hard, especially in technology, to try and predict the future. So Senseo, why not look at it a different way? Try and look at having a position in areas that, you know, are more of a certainty, whilst you wait for more clarity when it comes to Oracle.
But on your next question, if OpenAI had listed 2 months ago, would they be up or down? We've got it. It's on the platform. OpenAI IPO market cap. There you go. If you think that is too high, you can short it. So that is $1.07 billion OpenAI market cap on the end of day 1. If it is to IPO, let me see when the date is. I think it's the end of 2027. Yeah, 31st of December 2027, the end valuation. So, you know, that is an indication of what the market thinks, albeit it's very thin liquidity. You can express that view, because it definitely sounds like you think that the value of OpenAI in an IPO situation has come down considerably. Well, that says it's on its highs. And, you know, the current valuation that Amazon's investing at is about 500 billion. So the IPO estimate is double what the current valuation is.
Can I say something controversial? So if you are not sure about OpenAI, you're not sure how it's going to go, you're kind of thinking, well, what kind of certainty can I see here? Well, Amazon, my chart is up there, not only is building out its space, obviously, in the AI side, but have you heard of Tranium?
It's Amazon's one, isn't it?
Yeah, it's Amazon's super duper chip, which many analysts think could have a chance in competing with Nvidia's and Google's as well. What this means is Amazon is building out an end-to-end. It has the full stack, right? You want to go data center, you can come just straight to us. Your retailer would take you all the way till storing your images of all of Richard's trades, right?
Do you like the sound of tax-free trading? Well, that's exactly what spread bet.
And there you go.
We're getting cut off, guys.
We're getting cut off by the advert. But Amazon also is investing heavily and now leading a huge amount of fundraising to build out its plans around its own chips and also its own data centers. So if you wanted to save a bet, maybe look to Amazon instead, Sensei.
But yeah, Sensei, that's great points. And your last comment there is exactly, I 100% agree with that. It's going to be a roller coaster. There are going to be, and it's great, isn't it? Because it gives us that stuff to trade on.
Yeah.
I've been long and wrong of Oracle for quite a few weeks now. And
I was long and wrong Meta, and then when I finally came up to neutral, you're like, get rid of it. So I got rid of it. Thank goodness.
All about position sizing, Ange. Right. So yeah, we had that in the FT. What else are we seeing in the Financial Times this morning? Of course, UK inflation is the story. Now trading 9754 in the FTSE. They're going through the highs. And we've got Warner Brothers story. JP Morgan pulling 350 billion from the Fed. That is about they have put it into treasuries over the past 2 years. So it's just basically arguing that JP Morgan wanted to lock in the higher yields before rates started coming down. So not quite as big a story as the headline suggests there.
Nice. Right. Are we ready for upgrades and downgrades? It's pretty quiet today, but we have a few.
Do it.
Right. We got some news from UBS, Admiral cut to neutral there. We've also got Ashtag, KeyBank there, putting Ashtag overweight, price target now 635. Glencore, Berenberg initiating a buy on Glencore.
Interesting.
HSBC, KBW there, initiating an outperform. And last but not least, Philips, RBC sector perform there.
Just having a look at Glencore there. Where are we currently? We always said £3 was a great level. Now 373. So that's had a decent year, or a decent H2, you could say, because the H1 was pretty brutal. Trading down to £2.20 at one point in that April sell-off. But generally trading around that £2.90 level, eventually came right. And now up 373. So that's interesting. Berenberg going to a buy on that, even at these levels.
Yeah. Otherwise, on the commodities front, we're seeing gold edging higher again. I keep hoping that the gallery will hit my gold button, but they don't seem to get the hint. Silver. I know. I
appears he was wrong on that one.
I sold out and took profit.
Is that new all-time highs?
Yes. Darn it. Yes.
Well, you had a chance on Friday to get back in because it was down 5%.
I was sitting, quite smug, but I should have got back in.
So, but what's your dotted yellow line there at the top?
So my perforated yellow line is where I sell, and my solid line is where I got in. So if you can see here, I've even written a note there where I sold everything after speaking to Jack on the volatility desk.
Yeah.
So I marched over there. I thought, should I just take
You did march, I remember. I saw you.
a quarter sell a quarter, have that as my Christmas present, or should I sell everything? There's also a secret Bloomberg machine there that no one seems to use, so I commandeer that.
We should steal it. I don't know
Yeah,
if
we
they
should
even
bring
realise.
it here, right?
Yeah.
No one uses it. And basically, the spread was crazy. Absolutely crazy. Like even Jack was saying, this is insane. Like, we can't price this. The market's gone. And that was just before the Fed. And I thought, I don't want to get kicked by JP. I'm going to take it all off.
Yeah.
And that's why I did. And look, it cracked higher. Yeah. So.
Shoulda, woulda, coulda, Terence.
Yeah, no, shoulda, coulda, Terence, like FOMO, and no FOMO. I took it all off.
Right, let's go to a break then. We've got a couple of minutes before we give you your market movers for pre-market. We'll see you in 2. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris C.J. Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, welcome back to Opening Bell with Old School Remix. Rich and myself, welcome.
GS, well, a big shout out to Napster. DJ Napster, Luke and I had a drink with him last night. So he will be currently driving his boy to school.
Ooh. Jesse 14, where are you? And also our Sachs, where are they this morning? Frosty 56, good morning. Right, you got the bell?
Right, quick move in. BAE Systems looking up 1% on selling Air Astana GDRs. Games Workshop up 1% on that dividend. GSK up 1% on Extensure, approved by US FDA. That's pretty much all we got, actually. Serco up 1% as well.
Swiss Re indicated down 1.4% in pre-market. And we are also keeping an eye out for the renewables. Why are you shivering?
I got a judder.
Oh.
Go on, bring it.
Hey, here we are. Let's go.
Land Securities and Persimmon both up first thing, along with Barclays up 1.1%. Everything just opening up rather slowly. Surprised to see BP, one of the strong ones. We're just talking about oil on the desk. Oil is helping your IAG, isn't it, Ange?
It is. Come on, Andrew McKelvey. It is helping. I know you've got that on your books as well. But like you said, waiting longer than usual. I thought it would be a month, then we'd see it flying, but I've had to wait 2 months.
The buyers are coming in for Fresnillo up 1.8%, 29.82, as they are with HSBC as well. HSBC and Barclays up strong this morning, shortly followed by Lloyds as well. So UK banks loving that inflation data. Get those interest rates down. That's it. Interest rates lower, I would have thought the banks would have come lower, but I guess are we now concerned more about bad debts on for UK banks? Well, that's a little bit of a strange move there. I would have thought it would be the opposite. Do you want to see your losers of the morning, Ange?
Yeah, let's take us through the losers. Wizz Air is whizzing lower, down 1.2%. Diageo, down 0.75%. That just keeps falling.
Well,
Diageo.
no, it's been £16 last week.
Yeah, but I don't know. Look at it now. They had a poll when we were off yesterday for the US test, so we didn't have a morning show. They had their own guess the chart, and it was a chart that was linked to Diageo, so they came up with Tesco.
Tesco, yeah. And I spotted that one. Very good. Jesse's let you know, listening while walking the dog.
Ah,
good
okay,
morning.
Good
Give
morning.
us the dog's name as well. And let's...
Never a dull moment here.
Yes, it's reasonable. Standard Chartered up strong as well. Shell and BP. The miners are going. It is FTSE-tastic this morning. Let's see where that leaves us with the FTSE 100, 9760. Come on, the FTSE.
You can do it.
That is my trade of the morning.
Shall we move across to Europe now? Says Ange with a gruff voice. Let's have a look at Europe. Do you want your charts or my charts?
Go on, let's European losers first.
Ryanair down 1%. The Air France KLM, all the airlines, Lufthansa also down 0.75% there.
So Kira, the golden retriever. Good Kira.
I love a golden retriever. Oh my goodness me.
BMW and Volkswagen also down about 40 basis points on the morning. Your European luxury goods also lower. You got Gucci and LVMH down 40 basis points. And Puma now at €23 ahead of Nike numbers tomorrow night. Are you excited?
I am very excited. Please, please tell me Nike is going to get above 70.
Yeah. Yeah.
When?
I see it more chance at 70 than 60. I'll give you that.
I bought at 70.
Oh, right. It's a long-term game. And right, winners we're seeing, banks are strong this morning. Deutsche Bank, they're up as well. SocGen up 1.5%. That's your best performer in Europe. We've had a quick look at the commodities. Shall we have one more?
Yeah, why
One more
not?
look at commodities. There is silver. Wow,
Look at that.
$65.65. Where does it stop?
I know, we keep saying here that, trees don't grow into the sky, but silver's been going longer than anyone anticipated.
Right, US crude finding a base end. So that is up 1.3%. I am going to sell some puts on oil. Where are my options? There they are. What do we think? Oh, I'll tell you what, let's put this out to the audience. Where do you think a safe level is in oil? What do we think it will not go lower than? Got that, producer Phil? What will oil, what would be your level you'd be happy to buy it at? Is it 52, 50, 45, or lower than 40? 52, 50, 45, or lower than 40? Is WTI, West Texas Intermediates. And wherever you guys vote, I will look at the puts there to sell that. To have a history of losing money on oil options.
It's funny, isn't it? Is that, well, you know, I thought it was Tesla that was your kryptonite.
Ooh, no, that's the worst.
Taking a look, whilst Phil is putting that poll together, those are my yellow lines of interest there. So just to give you a graphicized look at what Rich was talking about earlier, but where do you think it might go? Chocolate. Are you buying chocolate over Christmas?
Well, I tell you what, I fancy some of it. This has been sitting here for too long. I'm having some. Sorry.
Good,
Phil.
good. Whilst you're opening that, I'm going to talk you through the chocolate sector, because Barry Caribou, which is, you probably have some Barry Caribou in there as well. This is the world's biggest producer of chocolate before it resells all the chocolate across to, you know, your Mars bars, Makers, Snickers, you know, everything, right? Your M&S, whatever chocolate they have in there, they are likely to have a bit of Barry Caribou. It sells them in cakelets and big chocolate ingots. It is down more than 1% today, giving back some of the gains that it saw in the previous session, where it jumped a huge 4.8% there. And this is after it said that it's in the early stages of exploring the separation of its global cocoa unit from the rest of the group, according to sources.
Right, only single stock position I've got on at the moment is Whitbread. So we're having a little bit of a tick up. It's obviously been a tough month for Whitbread with that profit warning on the back of the budget. That's now trading £24.21. What do I do with that one, Ange? I think I'm in at a reasonable level, and I think you start to get a little bit of a recovery there, back above 25. I might set a profit target of 25.40 on that.
Talk us through how you're getting that, number.
Well, you know, I don't like drawing lines. So I like this thing at around, where did I start to buy it? £28 when they came out with this problem. They said they were going to buy back a lot of stock. We saw it go back up to 31. And then, you know, this pricing, I think this pricing is in for some of that budget response. Then they came out with a profit warning and it dive bombed. And I just think this was overdone. It was a long fund selling, and this should never have been down below where it is now. So with the relief of the pressure coming from that selling, you just need a little bit of time for that stock to be digested. And I think that we get up, you know, at least back to where it was on that afternoon of the profit warning, you know, round about when the US opened. So when the US open and it's a UK domestic stock, if it goes down further, you know that it's a US seller. So it's like a Fidelity or a Wellington coming in and just hammering it. And so that's when you know it's not necessarily trading at the right price, it's trading at a clearing price. So that's where that comes from.
Interesting. And I like the fact that you're selling less than half, of that red bar, because that's where we would put it as well, because, you know, everyone's looking at the halfway point. Suzuka.
Some of it some of it's warranted because of the tax bill, but their cost savings that they're accelerating also take out of it. So reduce that additional tax. So.
Right. We are almost out of time. Just showing you something sweet before Rich and I have a quick message for you. Suzuka is down 3.5%. there after its guidance. And speaking of which, we have a message from the heart, both Rich and myself. We are going to have some surprises for you guys, more of the good stuff.
Very, very exciting. So we kind of realized I leave the building about 10:30, 11 a.m. and we sometimes record some extra content and it goes out in the afternoon. But that's still recorded at 10:30. So we kind of feel look more at the Discord and the amount of interest in the moves in the US in the afternoon and the continued messaging on there. It's quite obvious that we're leaving you high and dry when we come off air at 9:30. So we've talked to our bosses and
friends on Discord. We've spoken to Maturin, of course, Friartuck, Arsax, Andrew McKilvey, and also Boise. Thank you so much for taking the time. And to get a sense of, what more can we bring to the show?
Yeah. And so instead of condensing everything into an hour and a half in the morning, when some people are missing it, they might be out walking the dog, then we've decided to try and do more things like I did with Piers yesterday. So more US live opens. We'll do more of Ange out and about doing her content.
Holding £350,000 worth of gold and, telling you, what's happening on the inside track. But we'll get you more Julian Wheeler, obviously John Mayer, whom we have on today as well. Just in a different distribution style. Yeah,
so we'll be able to do our live reactions to the UK budget like we did. We might be able to do Bank of England rate decisions. So we've got a great studio here and we've got a great platform in the UKIG YouTube, which Ange is going to show you how to subscribe to. We might not do as many of the morning shows. That might be reduced slightly, but you'll get more throughout the day on almost like an iPlayer hub idea, rather than it just being, in the morning. Right, see you later. Have a nice day. Good luck.
So here is the YouTube site that I'm going to show you right now on my screen, FNF11, before Phil says that in my ear. But we'll be bringing you more of the stuff here, and you can subscribe to that and get all the same stuff and more. But we'll also put it on Discord so you get, first view. And we'll always, Rich and I always want to know your comments. So we'll be canvassing you for what types of content that you want, because it's a community show. We do this for the community.
And Maturin's massively helped us out with the Discord there. So we are hoping he will allow us to do more on Discord as well, along with producer Phil, of course, which has been a big part of that. And it's going to be
exciting. I'm very excited for the future.
Very exciting.
Yeah.
So we are going to take a couple of weeks off at Christmas. Hope we don't mind that. Me maybe a week longer than Ange's. It's my birthday at the start of January.
He's going to come back looking like a different man. I won't recognize him.
Yeah. But so we're not sure exactly how the new setup will be, but that will be running into January. You'll still get your week ahead with Chris Beecham on a Monday morning show. You'll still get your trade of the week with Axel. I'll make sure of that. We'll still get all the favorite guests. So, we'll make sure that we cover defense of Joachim, mining with John, US stocks with Julian. Of course, Piers will definitely be on as well. And any questions, do put it to us and producer Phil on Friday, because we're going to have a special Q&A session. Good. Right. It's time for Guess the Chart. Which country is it in, Angeline? Ooh. Is it the US or UK, Phil? I saw you, but you chased me away because you don't want me to see. It's the UK. Everyone, get ready, get set, go.
Snow comes down the lights go on. Cocoa cups and charts at dawn. Rich is laughing, Angie's wide awake. Festive crew in the groove they make. We've got the rhythm in the data stream. Jingle tick tick of a trading dream. Keep the morning turning, keep the bells in time. With IG glowing, everything's aligned. Hand to hand, heart to heart, we move together when the numbers start. Now it's time to guess the chart. Phil cues the cameras, the lights shine bright. Terrence lines are playing Christmas light. Pierce talks tech with a winter grin. Chris reads figures, sleigh bells chime in. Luke's gone deep through the frosty week. Axel's ready, trade of the week. We're built on chill, on truth, on trust. A beat, a chart, a snow soft dust. Keep the morning turning, keep the bells in time. Oh yes, with IG glowing, everything's aligned. Yeah, hand to hand, heart to heart, we move together when the numbers start. Now it's time to guess the chart. Step to the rhythm, feel that cheer. Every bell that rings says Christmas here. No matter how the market swings, we find the joy this season brings. Keep the morning turning, keep the rhythm tight. Oh yes, we're live
From winter dawn to London night.
hand to hand, heart to heart. We keep on dancing where the numbers start. Now it's time to guess the chart, guess the chart. Can you feel it?
Yeah, we can.
Yeah, we can. Can you hear it?
Yes, my friend.
Yes, my friend. That festive soul, that trading spark. We're lighting up the winter dark.
Whoa, whoa, whoa.
Yeah, 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 yeah.
We've got Aaron in the house. How are you, son?
Very well. How are you, Rich?
Very, very
A
well.
while.
It has been.
I see you waltzing up and down the office, but we haven't had a classic boxing match for a while.
Waltzing, I like that. Moonwalking around
Yeah.
the place. Right, take us through your view for next year.
Yeah, an interesting one. I mean, we've had some decent growth this year across all equities, really. Much of emerging and developed market. I think emerging market and Japan were the key standouts this year. I think we're looking for a year of sort of growth normalization, which is, I don't think we're expecting a significant recession. I think we've achieved that soft landing. But yeah, I think we're looking at a decent return. I think, policy is going to come into question, both fiscal and monetary policy.
Across all G7 or?
Yeah, I think it's going to be pretty focused on America and the UK. I mean, for us in terms of the investment management side. But I think now we know that rates are coming. We know rate cuts are coming. It's just the magnitude and the speed, and if anything's going to disrupt that. So I think that's going to be a key driver next year. You've got geopolitics bubbling away, and you've got AI spending, which is what one would say that this is a micro thing rather than a macro. But because there's so much spending, it's now become a macro thing, and it's affecting markets. So I expect that to dominate as well. So that's your nutshell analysis.
Which we're going to dive deep into.
Yeah.
So let's look at how analysts get on, right? So this is a one I had on screen briefly yesterday. This going back to 2016. The dark navy block is where the average analyst target price estimate at the start of the year is, and then where the market ends up. It's actually really impressive, isn't it?
Yeah, it's done phenomenally, the S&P. Even when, you look at the raw data and it's telling you that it's a sell based on the fact that it's trading at, levels.
And more the analyst, how accurate the average is.
Yeah.
Now, any one analyst tends to be quite far off. But should we just solely focus on the average?
Well, yeah. I mean, it's interesting. I'm quite surprised how accurate this average is, because you look at the banks each year, and then you kind of come to look at the end of the year, and you see how many are miles off in terms of their pricing of where the indices are going to end up. But this is mighty impressive how accurate they've got it, and the trend is clearly going in one direction for US stocks.
But the one they get wrong is in a down year, right? Because they're always optimistic.
Yeah.
So that looks like the target was 5250 and we finished about 3,850. So 1,400 points off.
Yeah. Is that 2022 you're talking about?
That's 2022, yeah. So if we were to say their margin of error is 1,400 points, looking at this year's average target is 7,968. That would leave us at 6,500. So pretty much where we are now once you take your dividends out.
Yeah.
Do you think we see 6,500 or do you think we see 7,968?
I think it depends on how things go in terms of both. If the labour market softens, we get rate cuts. It should fuel equities further, I think. But depends on
not hurt the consumer though. If you
that's the balancing act. So you've got these two forces, and it depends which one has the higher magnitude in terms of which one is going to have the most impact on equity markets. Because when you have rate cuts, even when you had a weak consumer at the beginning of COVID, you saw equities roar back because there was so much stimulus in the system. We've got very supportive policy from Trump, big beautiful bill, amongst other fiscal measures, an inviting tax environment for the consumer. So you've got these. It's almost like a bit of a tug of war, and whoever's strongest on each side, you'll get that return in equities or you get that pullback. That's how I see it.
What you're describing there is a run it hot. Now, what are the consequences of running it hot?
In terms of what equities just continuing to pile on?
No, running all his stimulus. He's running the economy hot. Dodge is gone, right? That's dead. It's been shut down. He now does not believe in any kind of austerity or cost cutting. He is running it hot, and he wants to appoint his own chairperson of the Fed so he can manipulate interest rates.
Yeah, the concerns there are definitely in that bond market. I mean, the long end yields. I mean, we've discussed this before, but I think that the long end of the US bond market, you've seen the yields not substantially lower because they're concerned about the level of debt to GDP in the US, and that's what you're beginning to see is a higher term premium demanded, and you're seeing concerns over particularly long duration fixed income in the US bond market. So that's the concern and you're seeing that in the UK as well, is concerns over fiscal debt and budget deficits is translating to higher bond yields. So that's, I think, the concern of running it hot and not being so prudent with financial policy.
So let's look at that 10-year now at 4.16. We got the 20-year 4.78, 30-year not much higher, 4.82. What level does it have to get to where you think that this running it hot is actually bringing in some danger?
Well, I think it's probably going to affect above the 10-year more so, just because that's, the 10 I'd say is kind of the long end / belly, but the 20 to 30 year, if that gets, into the 5s and 5.5s, that would obviously be quite a big jump, but that's when people are going to be really concerned in terms of debt levels. I mean, the UK 30 years around 5.2 at the moment. I think if it gets higher than the UK or the UK plateaus and America ticks up higher, that's, I think, going to be a concern for US bondholders. So
there we go. Gilts at 5.21 on the 30-year, 10-year 4.45. But let's stick with the US, because that really is the one that moves world markets, isn't it? Let's say we're in a scenario where, or what would get those long end yields up to 5.2?
Yeah, an interesting one, because the long end of the yield curve will tend to fall if they're anticipating rate cuts. So if there's the anticipation that rates are going to come down,
that's not happening, is it? Because we've had a rate cut and they've gone up.
Well, this is the weird thing, is that when we were doing our Smart Portfolio webinar, we were saying that the bond markets reacted quite unusually to rate cuts. So I think to get it, if you're saying what was going to make it higher, is just stickier inflation, which could easily happen with the tariffs. You're actually beginning to see it in the goods inflation. So we look at, you can get this on Bloomberg or FactSet or any financial software. You can see the split of what's driving US inflation. And even though it's, that 3-ish% figure, 3.5%, the key driver, or the driver which has been going up, is goods inflation. Not to crazy levels, but you can see it creeping up since sort of April, May. Yeah, exactly. And that, if that gets wider, you're going to get stickier inflation, which means the bond market's going to basically get disappointed, and you see higher term premium demanded. And if spending continues, those are concerns. And I think that's probably going to drive policy making next year, which is why we're selectively going for more shorter and belly level duration, because we've got some interest rate risk in terms of, well, if rates come down, we're going to get enough of a capital gain. We're getting a really attractive yield and income in that section, but we're not too exposed to what is this sort of bizarre fiscal deficit rising.
So you agree that it's being run hot?
Mm-hmm. Absolutely.
And that the consequence of that is inflation.
Yeah.
And the bond market's starting to be concerned about that. As soon as he appoints Hassett, that's immediately 0.2 on the yields. So that takes us to the 5%. So how do you start to express that in the smart portfolios?
Yeah. I mean, it's there's a few ways we can do that. We look at alternative assets as well. So gold is one which is we can have exposure to if we're concerned about yields rising upwards. We can look at other areas of fixed income, sort of short-dated investment grade credit. We don't have to be in sovereigns. But in terms of if we're just talking purely US yield curve exposure, we'd just roll it back down the curve into sort of more short-dated bond exposure.
And equities positioning?
In terms of in terms of a growing deficit? I mean,
as we move above 5%, because I'd say that's one of the things that's nailed on for Q1 next year, is they're going to test the bond market as soon as Hassett's appointed.
Yeah, I agree with that. I mean, look, we do have a mandate to invest quite heavily in US and global stocks, so our hands are a little bit tied. We can't start shorting stuff and doing options and any sort of exotics.
You can take the risk down, surely.
Yeah,
can't you?
we look at things like, something that we've looked at is the equal weight S&P 500, because obviously you've got a lot of exposure to different companies. You're not 40% in 7 companies, so that's something we'd look at. We've looked at European equities. Emerging markets is something I'm fairly bullish on, so we've got a decent position in that, in Japan as well. So it's not a case of we don't like the US. We like the US, but where can alternative exposure be found?
You don't like Mag 7?
No, we like Mag 7, but I think it's very clear that the valuations are high. And, even if we think they're going to get higher, we have to think, well, what's the risk management of this? Because half of portfolio management is delivering returns, risk-adjusted returns, and half of it is, as I said, risk. So it's the risk-adjusted returns. So we're having a look at, well, what is the potential drawdown if we're allocating in such high proportions to Mag 7? So that's something which was really important. So absolutely, if we didn't have exposure to that, we'd be toast, right? As would many fund managers. But yeah, we have to be real and honest and say, well, this area is quite expensive. What else can we look at to add to the portfolio which isn't correlated with this, which can help our portfolio and potentially dampen a potential drawdown?
Do you think 26 is the re-emergence that we've seen Mag 7 get killed in the past 3 months on a relative scale? Google saved it, Apple saved it, but the AI plays, let's say. Do you think you get the re-emergence of those to come out and be the leadership, or do you think that it is a move to the 493?
I think there's a mix of both, because we've got this enormous amount of capital expenditure in AI, and we've seen it, across all businesses, like HSBC, for example, huge bank. I've got an agreement with Anthropic to do AI work with them, and I think it's only going to grow. And I was speaking to my friend who's a lawyer recently. They're introducing AI into their workplace. So I think the trend is going to be global, and there's going to be huge beneficiaries of that when there's demand for data centers, chips, and other technology companies. So look, it's certainly going to continue. But part of our philosophy is looking where can value be found. What is cheap? What is cheap relative to what its intrinsic value is?
What's the answer to that?
I mean, it's the $1 million question, right? Look, I think you look at UK equities, you're getting a sort of 40-50% discount in terms of the PE ratio. You're looking at 14 times earnings, roughly 15 times earnings.
It's not a big discount if you look 3 years out, though, is it? Because of the earnings.
It's gone up, but I'm saying purely if you look at US the price P ratio, you look at the UK P ratio, even though you're obviously at all-time highs in the UK, you actually go under the bonnet and you're like, wow, this stuff's actually quite cheap.
No, but what I'm saying is you don't, if you look 3 years out, then they're a lot closer because the earnings growth much better in the S&P.
Yeah.
So it's you can't really look at the forward P ratio.
No. This I'm sure saying purely looking at backwards P ratio. You're looking at something which is, attractively priced relative to US, and you've got obviously quality companies in completely different sectors in that area. So you've got things like pharmaceuticals, defence, banks, which
Are we
isn't.
going straight to 10,000?
Look,
784 this morning with a low inflation print.
I think it's possible. It looks now that we're going to get that rate cut, that we've had that soft inflation print. That was the first thing I saw today. So yeah. I think it's I think much needed. The UK consumers definitely struggling relative to the US consumer, without a doubt. In terms of the fiscal constraints, the tax burden. So definitely an interesting environment for the UK. But it depends on how the policy is next year, because we've got an enormous tax burden, which we're all feeling the pinch a little bit.
The smart portfolios, how's it been on the year?
Yeah, good. Yeah, really strong performance across the board. So we'll provide an update soon in terms of year-end performance. But yeah, outperforming our benchmark, really happy with our performance.
Fantastic.
We've taken some really good gains through exposure to things like gold, had a little bit of exposure to higher yielding credit, which has done well. And our duration positioning has been pretty spot on this year. So we've avoided that long end of the yield curve, which has been quite tricky. Had good amount of emerging market equity exposure, which has been brilliant.
And of the five that you run, they go from kind of low risk to high risk, right?
Yeah, exactly.
Which one's done best?
Yeah, the highest, because it's been driven purely by equities, emerging market, Japan, US, and also the UK, which is, I believe, outperformed the S&P 500. And last quarter, our aggressive portfolio outperformed the S&P 500. So yeah, nice thing to have and say that about our performance. So by about 50 bips, we outperformed.
Chances of the art of investing becoming a smart portfolio next year?
Well, I think it's the case of watching this space. There's a chance.
Could be an exclusive there, viewers.
Yeah.
There is a chance. We're trying to twist their arm that the art of investing get its own smart portfolio. And how do people actually invest in smart portfolios then?
You just on your My IG section of the thing, where you can access all your your ISA, your spread bet, all the accounts, the crypto. There's an option where you can add a smart portfolio. You have to do a 5-minute questionnaire, and it will recommend.
That's me out then.
Well, it's a regulatory thing, Rich, to ensure that our clients are getting the right portfolio. So it looks at your time horizon, it looks at how much savings you've got, various things like that, and your attitude to risk, how you can deal with loss. It will then recommend a portfolio, and let's say you score a 3, which is there's 5 portfolios, you can go up 1, so you could go to a 4, but then you can go as low down as you like, and then you put the money in and it will invest momentarily. It's all done automatically, and then Martin and myself are pulling the strings in the background. So
a worrying thought.
Exactly.
No, it was great. What lessons did you learn from the man versus machine? So just to anybody who didn't see it, it was Aaron and Martin running their fund idea, and then AI having a crack at it as well.
Yeah, I mean, look, AI, it's got good ideas for sure, but I think you're always going to have human involvement, because it would make very, very weird decisions. It would buy stuff, sell it, buy it back the next week. And I think it would just, it would contradict itself sometimes. But I think we've learned that you need to, once your philosophy changes, obviously change your view. But if you've got an idea, don't do anything knee-jerk. And that's, I think, the first lesson I learned from one of my first bosses in investing was, if things fundamentally change in your philosophy, change. But just because the pricing's wrong at the moment and your philosophy is intact, don't react rashly.
On that, last question. S&P 500 is 6,800. What is the lowest print in 2026?
Oh, that's a good question. I mean, if things ramp up,
No if. What's the lowest print?
I think there's always a chance we could get a 10% correction, let's say. So what's that, 6.2 maybe?
6.2.
If there's a geopolitical spat, there's trade war with China, if things kick off with Trump, and if policy, I think if fiscal and if monetary policy, I should say, doesn't follow what the swaps market is saying in terms of the...
It's only 10%.
Yeah.
It's all about the earnings downgrades, isn't it? If there's last chart that we show is the way that the EPS estimates for next year have rallied so much, have been taken higher from 275 to 305 since June.
That is a concern if the earnings don't come to fruition. I mean, we've seen phenomenal growth. Also outside of the S&P 500, the S&P 493 showing really, really strong strength. And if those earnings don't continue, you get a tantrum.
Yeah. I wonder what it will be caused by, if it will be that bond market, or if it will be...
Yeah, or a black swan event even, or something like this. I mean, that's why, year ahead forecasts are notoriously tricky.
Yeah.
So you're going to try and make me look a fool next December.
Oh, not at all. No, but I think the easiest one is, where will the market bottom? Because I can't remember a year where there's not been a 10% sell-off.
Yeah. No, it's true. I think 2023 we had the Credit Suisse debacle in Feb time.
Yeah.
2024 we had carry trade. I think it was 5%, 6%, but that was still... People were concerned about what was going on with the yen and if the carry trade was going to continue, and you put up a lovely TikTok about that back in the day.
And then the tariffs this year.
Yeah.
So good stuff, Aaron. Thank you very much. We've got John Mayer coming up. Looking forward to the holidays.
Yes, absolutely. I'll be in America next week. So
what about?
Starting in Miami and then going to the Caribbean. So I'm hoping that the dollar continues to weaken. To get more pounds for my dollars. More dollars for my pounds, I should say.
Fantastic. Aaron, thank you very much for joining us. We'll see you after the break. Ange will be here with John Mayer. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, welcome to the show. We have the one, the only John Mayer from SP Angel. Hello, hello.
Hi.
How are you?
Good,
Good
good.
to have you in person. What a treat. We normally see you on air and you've kind of like, just risked your life getting to us, getting to your office in time to patch through. How was your journey today?
It's easy. Yeah, I jumped on the tube, no trouble at all.
Nice, nice, nice. Well, we have been awaiting you. All the questions have been flooding in already, as you can see there. Everyone's saying welcome, welcome. We have No Name already asking, please ask John about direct lithium extraction. IR 304, not IR 37, saying please give us your thoughts on the VanEck Junior Gold Miners ETF. I can talk about that as well. And another interesting one from No Name as well. When will silver crash?
Good questions. Good questions.
Yeah.
Let's start off direct lithium extraction, DLE. I'm not a big fan of this. Now, if you are a lithium miner and you have lithium brines, so that's lithium in solution. Remember, lithium is a highly mobile, soluble metal, believe it or not. And yeah, when it's in a brine, let's say it's in a salt lake, if it's up in the Atacama, then you can pump that out. You can use the sun to evaporate and concentrate that. And then you can, I won't say simply, but you can economically extract that lithium. For many, many years, it was a state secret because you use lithium as the primer for atom bombs. So the Americans didn't want anyone to know how much was being produced, where it was going, or anything about it. Direct lithium extraction is a bit of a holy grail. It doesn't work that well, as far as we are aware. If you can use the sun to help you concentrate, so you're up in the Atacama or you're in a very dry place like the desert in Nevada, that's great. But if you're somewhere wet, where you have, I mean, actually geothermal brines could also be okay because you get a lot of heat out of the ground. It's really a question of energy and the cost of that energy. If you've got super cheap energy, yeah, okay, you could probably concentrate those brines. But for so many companies, I think, trying to work on lithium brines, if you're in a wet country, I think walk away.
Just showing you a picture right now of an example of what we are talking about. That is kind of, can I call them VATs? Can I call them VATs? You look up there right now.
It's a valid term, yeah. Tanks.
Yeah, tanks. Actually, not too dissimilar from, except that the ones that I saw at the gold refinery were clear glass. But yes, it's a multi-step process. Interesting about the you mentioning about the weather, about it being wet. I didn't realize that you couldn't do it easily in wet conditions. How about places like I guess they'd have to get it there. I was thinking about like the Middle East where it's so dry.
Yeah, again, if your rainfall is low, you have the opportunity to use evaporation ponds. It just gives you an economic helping hand, and that's really, really handy. You need to concentrate your lithium brine to certain levels in order to make the process work. So you can then use the sorbent technology to go to the next stage for production of lithium hydroxide or even lithium carbonate if you want to go there. So, but we do have news today. Kodal Minerals, one of our clients, just reports first revenue from their lithium mine in Mali. I know Mali's had a few issues with some terrorism. But actually, things are working again in Mali. I think the government is regaining control of the roads, and certainly Kodal Minerals is exporting ore. That ore is going to China, and they are being paid, which is what it's the name of the game.
We had Bernard on, and he looked well. He sends his regards as well, and he spoke about things stabilising there. Looking at his charts, it's up 3.2% there, but still obeying that downward trend there. I've drawn that out for you, and it has tried to poke its nose though. Price action has tried to poke its nose above that trend line there on the 1st of December, and it's starting to make its way up the 20, 50 and 100 EMAs there.
Definitely, there were some investors who said Mali's too difficult a place. We don't want to be there anymore. We had poor old Terry Houlihan, CEO of Resolute Mining, being jailed. I think it was 10, 11 days. I sent him a lot of WhatsApp jokes to keep him going.
You're very good.
So he did a deal with the prison guards. They said, if we supply diesel for your generators, can you supply us mattresses, food, and let us use our phones? So, yeah. But, windowless room.
Yeah.
3 pipes for air, and they had to block up the pipes because the mosquitoes were coming in. So it wasn't the best time Terry ever had. And of course, they then seized Barrick Gold's mine out there, the Lulo Gunko complex. They then threatened to jail the chief executive, Mark Bristow. So he's not been back there in a hurry. And in fact, he's since left Barrick. And they helicoptered out the gold. Now, of course, those assets are probably going back to Barrick now. I think the government has.
Yes, I think it was last week, wasn't it? The news came out.
Yeah. So Mali, I think, is going to return to being a more normal place, and hopefully the terrorism will be managed better by the government.
Interestingly enough, I was watching that last week to see whether there was going to be a spike in Barrick's price, but I didn't see one. It has started moving higher, and almost using that 20 EMA as a support line there. But I was expecting a bit of a spike. Maybe it was all factored in.
So there is a new proposal that Barrick might split itself apart. It'll keep all the North American assets in a new company, new IPO, and all the other stuff, the plan to develop the Tethyan mine in Pakistan, plus the assets in Mali and the Congo, and a whole bunch of other things, all to stay in Barrick mining. So quite an interesting move. But they do have a new and developing discovery in Nevada, wherever it is in North America. So that looks quite good. It's quite an exciting stock.
Speaking of exciting, whilst we're talking about, I love this job. You get to talk about all the most interesting things daily. The other thing that I saw recently that was just basically chemical extraction was silver.
Yeah.
And they rate the silver up. They just leave it in this chemical, for days. I asked them, how long does it take before you start, being able to start raking bits up? And it's about 4 days. They said they can make it quicker, but actually this is a tried and tested method, efficient, or as efficient as it can get. Silver, no name asking, because I'm going to show you the chart, people. You saw me here when I rushed out, marched the vol desk, and then thought, I can't not take this profit. And lo and behold, silver has ridden higher yet again. How high can it go? And also no name asking, when will it crash? Will it, is the question.
But there's some things that we really can't forecast. All the gold and silver are being bought up by central banks. They're also being bought up by investors who have been anxious about things like a crash in the AI market, a collapse of the US dollar, a whole bunch of things that are always worrying people. And let's face it, markets climb a wall of worry.
They do.
But of course, if central banks are big buyers of gold and silver, then that raises prices. It's an enormous market. I mean, the traded value of silver is about 15% of gold. So it's still really, really big liquid market. And it makes a lot of sense that silver will not only tag along behind gold, but may even do better, because there's the potential for a physical market shortage going forwards. There's so much silver being used in solar panels, and the manufacturing of that is not getting any less, it's just getting more. More people,
Data centers.
all of that, and electric vehicles in the drivetrains, although we still have yet to work out where the silver goes in all
Oh,
that.
apparently in the conductors. Remember when we were talking last time? I looked it up. Interesting. I didn't realize that they were in the drivetrains either.
No, it's not something
would
we
have known?
look into normally. but if there is a physical shortage coming, then prices will go further. So it may be that silver becomes the better investment going forward.
Yeah. Just so you are aware, earlier I have put a position in. I am dollar averaging in, so I am back in the silver play, people. Much bigger in the copper play, I have to say, because I like to put my theory out to you as well, because we're talking about 2026, and this is based on data centers yet again and the need for energy. So will copper, I mean, at the moment, it's not, let's put up copper for you. It's had a few down days, down sessions.
Well, copper's not just data centers. It's, people still, that governments are still putting in electric vehicle car chargers. They're still putting in wind farms and solar farms. All this stuff has to be cabled up one way or another, and copper is the best way to do it. Okay, if you're doing overhead transmission lines, those are aluminium. But all the short stuff is copper. And I mean, I'm rebuilding my house at the moment following the big flood, and there's a lot of copper going in there.
It was a big flood.
It was a big flood. Yeah. It should have been ready. Noah was ready for it. We weren't.
We'll get you an arc next time.
Indeed.
And gold, gold 2026. What is your forecast? Because we have had Peter Hambro here saying gold at 5,000 by around November next year.
Well, Peter's looking like he might be right. I remember thinking when he first told me about this forecast, I remember thinking, oh, are you really sure about that? But it's very easy to see gold going through 4,500 and heading up to 5. So whether it breaks 5, I don't know. I'm not sure I would necessarily hold on quite that long. But you know what? If China, Russia, India, Brazil, if all those countries want the price to go up, that's where it's going. Saudi Arabia, been a lot of gold going through Saudi Arabia, and nobody is it going into and stopping in Saudi Arabia, or is it going to Saudi Arabia and then going on to China? We don't quite know.
And for those of you wanting to read more about gold and silver, we do also have an article written by Fabian Yip over in Asia Pacific. I'll also be doing a short for you later on this week. Loads more questions coming down the line. We've got MKA, where Tony Davis asking whether you have a view on MKA.
Oh, Macango.
Yeah.
Yeah, okay. Well, rare earth prices are pretty solid. In fact, they were on an upward trajectory again. Prices are still low from a bit low for the Western companies to encourage new production. So what you need is to sign an offtake agreement, maybe with an American group, where you get a floor price, and that's important, because you can't be sure that China's going to give you rare earths anymore. So in order to produce permanent magnets, you've got to have a better price, and those deals are now coming. Macango, of course, has an advantage because it's recycling and it's able to produce magnets directly off its recycled materials. So they will be off to the races in terms of the production of rare earth.
So double bubble.
Yes, exactly.
Double bubble. We like double bubble.
And they also have a mine in Malawi. It's not the world's greatest rare earth mine, but there aren't very many of these things. So it's quite possible that they'll start to develop that, or they'll just push ahead on the recycling side. I mean, the world is their lobster, as they say.
The lobster. I love it. Or was it the world is their oyster, but lobsters recently, there was this survey showing that they didn't stay with one partner despite all those cards and things that are sold to the public. Anyway, that's another conversation to be had. All the calls that you've had this year, our viewers have really loved. But what they want to know from you, John, is, how do you make these amazing picks to get your, 10x or your 11x? What do you look at if you had to filter down one thing? And I guess this is a key one as well for those looking to invest in mining and metals in 2026. What is the one thing?
It's all about confidence in management. How much do you trust the management to do the job? If you look at the great companies out there, the ones that are really made it. Look at Moxico. I know it's private, and I was a founder shareholder. Brilliant management. Alan Davies came out of Rio Tinto, making it happen. You can buy it through Zeus, even though it's private. It does trade. You've got Anglo-Asian Mining. It's a client of ours. These guys took assets. They weren't the best assets in the world, but they did a great job with them, and they are fantastic people. In fact, the board is amazing. I mean, you've got John Sununu, former Chief of Staff and Secretary of State to George Bush Sr. He's the chairman. Then there's a guy who is very well connected in Azerbaijan. So Reza Vaziri, the team is brilliant. They really make it work. Look at Cornish Metals, another client.
You like tungsten, don't you? Tin.
That's tin.
Yeah.
And then Strategic Minerals, another client, which is tin and tungsten. So certainly Cornish Metals, new team in there, but guys that really know what they're doing. Yes, the capital cost of the project's got up, but they have really nailed down what's going on here. They have, I know this has caused a degree of controversy, but when you build a project, for example, the cost of rebuilding my house has gone up a lot. But when you build a mine, it's the same kind of thing. You need to nail down what all the bits and pieces are going to be. What's the cost of finishing the pumping? What's the cost of training people to work in the mine? What's the cost of communications within the mine? All the health and safety, all the stuff that has to come together. They now know what that's going to be. Now, okay, it's not a definitive feasibility study, but it's done to that kind of level. They know what the cost of everything is going to be here. What they haven't talked about very much is the potential for further expansion. And I don't think we're going to hear much from them on that for a while, because they need to do some drilling. They need to prove things up a bit. These guys really know what they're doing, and that's very important. I'm not saying Cornish Metal shares are about to sort of take off, but I'm looking to buy it next year.
Interesting. And also for those of you watching this, please just be aware. I know many of you asked me questions before when they hovered and saw market suspended on the top of the left-hand corner of the IG platform. This, as you said earlier, is temporary, right? For the Cornish Metal.
Oh, certainly. Yeah. No, that suspension. That's because they've delisted from Canada, and Computershare, the registrars, just need a couple of days to get things sorted out. So the stock will start trading either today or probably tomorrow. So it's the suspension is just a technical thing to do with the delisting. There's nothing to worry about.
Also, because we're running out of time, tungsten is another key area that you're looking at next year.
This is interesting. The tungsten prices we see from in the West are much higher than the prices being quoted in China, yet Chinese companies are definitely paying higher prices for tungsten. So there's a bit of a game going on here. Yes, of course, it's an industrial metal. There's a lot of tungsten being used in the defense industry. Notice we call it defense rather than anything else. And shall we say, there's possibly not enough tungsten to go around. The prices for APT, ammonium paratungstate, It's like the next step before you produce the metal. And yeah, it's a strong market, and there aren't enough players. I mean, the Chinese do quite a lot. We've got Indonesia closing a lot of tin mines. They closed over 1,000 informal.
Why is that? Is that because of their changing weather as well?
They were making a mess, these guys. They weren't paying, you know, when you have all these informal mines, they're not paying any tax. They're making a mess. It's environmentally disastrous.
It's terrible, yeah.
Indonesian government sees 6 tin smelters. So, and you get tungsten with tin quite a lot of the time. So, so that is certainly restricting the tin market and probably the tungsten market to some degree, and hence the tin price going up quite a lot. We're over $41,000 a ton. Nobody saw that coming, to be perfectly honest.
Interesting. Right. So just showing up Tungsten West earlier and also strategic minerals if you're interested in that. Lots of questions coming to the fore now. I know someone is asking about silver, IR 3004. Ange, please let me know an ETF for silver as I'm new to this. This is not trading advice, but I find that the iShares physical silver is very sensitive to the movement of silver. And another question from Chan Patel as well. RSAX, where is RSAX? RSAX, which is your favorite metal? RSAX is great metals buddy here. Which is your favorite metal to invest in 2026, John?
Look, it's not an easy one. Look, copper is
copper, tungsten, tin, copper, tungsten, tin.
Because they've all moved a little bit, but I think this is the beginning of the run. We're not at the end of the run. And the China's anti-involution policies.
So this one requires patience. It requires patience. This.
Investing does always require patience. You shouldn't necessarily invest for a move tomorrow. It's something you should be looking at over a 3-6 month.
So give us a duration here. Give us a duration.
Well, copper is going to do well next year. I'm convinced, right? And there is a supply demand. There's a shortage coming one way or another. We never quite know when that's going to happen. Certainly, you know, some people will try and react where they can, but you can get thousands of guys mining gold artisanally. Very little of that happens in copper. It's much more difficult. And planning a copper mine takes years and years and years. Getting the finance together, getting the permissions,
That's
the environmental.
10 to 15 years, still the correct number?
You can do it faster, especially if you've got an old mine that you're looking to redevelop. But yes, if you're starting from scratch and you maybe you're a geologist, you're not quite sure of how it all works, it can take quite a long time. Look at Solgold.
Yes.
Subject to a bid from the Chinese now. It's not a bad offer, 28p a share. The value's at about 800 million. Yeah, it's quite good.
Have we got time for one more? There was one on hydrogen. One more. I think you need to get me up the list. There's so many questions that it's basically, there we are. No Name asking, great knowledge. Thank you, John. Do you have any tips for investing in PEM hydrolysis for hydrogen power? Don't worry if it's not your thing.
Yeah.
Just read these things out because it's good to get it across. And maybe someone else on the chat might know. But in terms of the Christmas period almost upon us, what are you up to? Are you going to be here? Are you going to be? I
think we're staying in London. Yeah, yeah. London is going to be. London will empty out to some degree. Yes. And that's the best time to be in London.
I agree.
Yeah.
Best time to drive too. Now, just look at the camera over there because it's a great. We're going to get you full on down the barrel. Tell us what you've learned in 2025 and how that will impact your investing style in 2026.
Look, it's same old, same old. It's all about management, confidence. It helps if you know the management. You need to get some access to these guys. You need to be sure that they are going to do the job, deliver on the job, and work for you, the investors. It's as simple as that. Are these guys conscientious? Are they focused? And do they have the expertise or access to the expertise? It's not always that the CEO is necessarily the engineer, but he needs to have good people around him. He needs to know where to get those people.
Right. Thank you very much, John. We will see you hopefully before the end of the year. But a very big thank you for everyone on the floor. We've got Julian Wheeler coming up next from Shard Capital, so stay right there.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris C.J. Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hey, welcome back to Expert Edge, and we're here with another fan favorite, Julian Wheeler. How are you?
I'm very well, Anne.
It's great to have you back, especially since, we've had such excitement since you were last here. Let's have a look at some of your previous calls very quickly before we move on to, what's going to move next.
Right.
Should we look at Alcoa first?
Alcoa.
Yes.
There you go. You got it. Alcoa, that's obviously my aluminium stock.
Are you still a hold?
Still hold. It's just on its way. It's going. The reality about Alcoa, as I said, and you can go back to our whole show when we talked about it, Alcoa is power. It's a solid form of power. And the latest stuff coming out is that they are aluminium producers are getting outbid for power contracts by data center operators. So you'd say, well, that's no good. They're going to have to pay more for power. Sure, they will. And it'll go up in aluminium prices because nothing's for free. So if the price of power is going up, the price of aluminium is going up.
Nice.
If the price of aluminium is going up, the price of Alcoa is going up.
Nice. That one is super easy, and everyone here, I think also on the Discord chat, some people did have positions on after that, and well done you if you're still holding. The other one that had a bit of a pop.
Bit of a pop.
Dominion, I remember messaging you about this.
Yeah, you
because
did.
When you talk about, I'm a petrol head at heart.
Oh.
Secret petrol head. So when the moment you said truck,
Right.
I was like, right.
I'm going to say truck again today, though.
Are you?
Yeah. But there's Old Dominion. It had that weird little drop into the bottom there, that little valley, which slightly perturbed me. But then off we go. Basically, we've had a couple of upgrades since I came and spoke about it. And the reality, as I've told you, was that we're going to have a lack of drivers. Lack of drivers, and there was a new diktat handed down by Trump going into New York saying we want you to revoke commercial driver license for all these supposed illegal immigrants. That's about 15% of the New York area truckers who are potentially under threat. This is happening. It's not good, but there is going to be a problem. And then if we get a turnaround anyway, we tighten supply, and etc.
I like this. The only thing that I was pondering over the weekend that might change the story is, I like to have tick boxes next to my trades, and if I tick any of those boxes, it means that's it. Change of view. Change of view. I'm out. Game over. Okay. Is the driverless truck story going to impact Old Dominion? Because you laugh, but the US they've got wide roads over there, and they can roll this out at speed. We already know that they're the BYD trucks, but we also know that Waymo we're seeing loads of pictures from my American cousins taking photos of cars with no drivers inside, East Coast. That is soon to be West Coast as well. And we know that Uber has already been, every driver in the UK has been told by summer next year, you're going to have these driverless Ubers around. So is that going to impact this thesis?
Okay, well, I don't know if you knew that. I don't think you did, because I haven't told you what I was going to come and talk.
I do my own research, you see? I do my own.
But you didn't know I was going to tell you today about a driverless trucking company.
Oh.
It's one of my picks for next year.
Okay, go on.
Now, quick shameless plug. I've got my whole portfolio for next year is coming out. It'll be on the Shard Capital website. I've done it as teams of climbers this year, because to get a fourth year up in the market, we had, after 23, 4, 5 outperforming years, better than average returns. To get a fourth year is going to be tough, and I think you're going to need a new group of stocks. And then if we get a turnaround anyway, we tighten supply, and etc. I like this.
I like this. The only thing that I was pondering over the weekend that might change the story is, I
And so I've set them up as 3 teams, high, risk, and low. These are climbing up a mountain. Anyway, and one of them in there, high risk. I like my analogy.
You like mountains.
I like mountains. And my high risk team, which obviously is led by MongoDB, which I've already talked to you about many times. It's now 400 plus now, going to 500. Don't worry, keep going up. But it's a thing called Aurora. Okay.
Oh, I've not heard of Aurora.
No, Aurora Innovations. It's about $7 billion market cap, AUR. What does it have? It's the first mover. It is the only company with a commercial license in operation. This company is operation. This is not an idea. Remember, there are no robo-taxis running around in the UK. Yes, Waymo. Yes, Waymo. Waymo is cars. It's passenger cars. This is a truck. This is hauling freight. This thing operates up and down the motorway. And what does it do? It goes around at night. So it's just chugging around. Their latest contract they signed was with a mining company who are producing fracking sand. So this is in Texas. So the Aurora driver, without a driver, obviously.
No driver.
No driver. Turns up at the station and they load it with sand and it drives off up the motorway through the night, usually, and arrives at the oil rig where they're fracking, so basically where oil production's going on. And this thing effectively they can run 24/7, so they can do 2 or 3 times as much capacity at less than the cost. Now, back to the story of the stock. It had to raise money. It came public, like all these ghastly things in 2021 as a SPAC, was worth far too much. If you take that stock, if you take the chart right back 5 years, it was like $10.
There we go. Let's
when
go.
it came. If you go back to 25, one of these things, there you go, all far too early. They've had to raise more money. The development's taken time, but here we are 4 years later. They have raised the money. They've just been doing a sort of ATM raise. They're now capital. And the good news is, guess what happened a few weeks ago? The CEO bought stock. It's like that.
I like that.
You like that.
I do.
So these guys are in operation. So you said Waymo. Waymo is a robo-taxi. It's a little taxi for people to run around town.
It is, but with a whole iteration
This is
of...
entirely different. This uses very complex LiDAR. They're called they call it first sight LiDAR. They're the only one
Like the
approved.
God's eye.
Yes. Here's how good this is. They've talked to California about this. Here's my notes here. They simulated 14 fatal crashes between 18 and 22. They've worked out on the simulation, if their truck had been driving, all of them would have been avoided. Because their truck can see, it can see further than people, right? It's looking out down the road. It's looking red. It can see things coming way, way earlier. So there was one of the instances where obviously a truck went the wrong way onto the motorway. Yeah, so it crashed into a couple of cars. Well, their thing wouldn't have done that. It just wouldn't, because it doesn't not concentrate. So this is safer, cheaper, and they're on to the 3rd generation of product, which means their costs come down, so the whole business model can kick up. It's become far less risky. So this is one of my stocks for next year.
I like it. And the reason why I talk about, the phases, and you know that Neo 1X, the home robot, you can already put in a booking in New York, and you can get delivery in summer. All this is coming together at the same time because they're going to need more robots to load onto these trucks. I'm excited by this. I'm so pleased that actually you brought this up, because I've been looking for a stock that is in the US that can sort of fulfill this thesis that I've been having in my head, because I've been looking at China. Now, have you heard about they just call them platforms. And so they look a bit like this. I'm going to show you right now. For those of you that watch this space closely as well. And they literally have no drivers. They look like this, okay? The truck, has no cab. And what it does is it drives up and down, and you load the containers on it like this.
That's right.
You can put a cab on if you want, if it made you feel better. But actually, you don't have to. They are controlled. They have technology similar to God's eye. and it's super tested and used on really long, wide roads.
Well, this
which
is
the
exactly
US has,
this is
right?
exactly what Aurora is doing. But first mover advantage is critical. They are the ones with a license. You won't get a Chinese company.
Exactly, which is why I've been looking for a US one.
But all that does is it proves that this technology works, right? This technology works. And it's far more important and far more cost effective and far more valuable used in a commercial freight setting.
John on the chat saying, Julian, you ought to employ all those ex-drivers to do your work for you.
Yeah, well, if I can come up with something for them to do. Yeah.
Caught short saying appears as Avex Trading. Julian is the final boss. There you go.
Yeah.
Thank you very much for Aurora. What else is on your books for 2026?
For 2026, so some of the names I've already mentioned. Alcoa still there, Old Dominion still there,
MongoDB still there.
MongoDB still there. In the low risk camp, Pfizer I've talked about.
Well, even though it had that news yesterday,
Yeah.
I've got Pfizer on my book. So
Yeah. So it's back down at 25. Remember, 7% yield, 10 times earnings. They're going to have flat sales growth. So they've set the bar low, right? So they're flat sales next year. So the stock came back from 26 to 25. They've got 15 clinical trials progressing. It's like I've got 15 shots at this. If they hit on one or two of these things, they've got, through their thing they bought called Metsera, they're going to be in the anti-obesity camp, and we know how well that's doing, or how the demand for that. So yeah, it backed away a bit there, but as you can see, we're still good. You get paid 7% while you wait on this.
exactly, and that's why I've got.
This is why I call this low risk.
That's why I like. That's why
is
I've
low
got this on my books, because it is a divvy.
Yep.
Nice, pays a nice divvy.
What else have I got for you? Well, Aurora, and then a new final edition which came in yesterday. I wouldn't have put it in, but yesterday.
Yesterday.
The EU announcement. Yesterday. No, it's not the Beatles' greatest. Did you see what the EU announced about cars? Still on cars.
Still on cars. That's great.
We were rolled back. They've abandoned their idea that we were going to have no combustion engines by 2035.
I know.
Well, is that a surprise?
Always knew this was going to happen.
Well, of course it was. It's 25% of the German economy.
Yeah.
You cannot get rid of the car industry. So you've had two things happen. The EU will keep that going. That's going to save these companies a fortune in development costs of trying to still sell combustion engine cars and develop electrics, when we know that Chinese electric cars are far the best, and that game is won. So don't bother. Right?
So what you're telling me is that
there's a car company, when you combine that with what Trump's done with rolling back all the tax credits on EVs and stopping the fines for not doing it, Stellantis is going to do very well.
and
People probably don't even know what Stellantis is.
Here it is on my list.
Stellantis is the old Chrysler merged with all those European brands: Peugeot, Citroën, Vauxhall, Lancia, Alfa Romeo, Fiat, right? It's the entire, basically
Lancia.
everything non-German.
Yeah.
Basically, it's the entire European car industry. And you can see, lovely bottom if you're technicians. We've just moved off the
Love a
bottom.
bottom.
Pull that chart back and you'll see quite how badly it's done, right? It's had a terrible, terrible time.
Look at that.
They've had to pay up. And now I think they've turned the corner. Those two things, the rulings in the States and the rulings in the EU, I think that can do very nicely. So I'm adding that to my list.
And duration, is that to the end of 2026?
That'll go through next year, because that isn't going to be suddenly overnight. For an overnight, overnight trading, we might get Nike. Should do us some good.
Nike has been I'm sure I've said this quite often to Julian. I'm sure you're sick and tired of me saying this. It has been a pain in the for me, because I bought, and you can see here on Andrew's perforated golden lines, I bought at 70, and I thought by now. All
right, then you buy some more when it came back to 62.
And I thought by now it should have got to at least 80.
No, you're being. We still remember the market. Okay, so what's happened this year? What's happened? It's all been tech.
Yes.
So the dominant.
But tech had that AI shakeout, remember?
Yeah, that's the beginning.
And that
I came on 2 weeks ago and I said to you, it's over. I don't mean the market's dead. I mean the relative outperformance of tech and especially the capex cycle. I do not want to own these stocks next year. MongoDB is an exception. It is still fairly undiscovered. I do not want to be in the capex cycle. I don't want to own Micron. We'll hear from Micron tonight. Micron stock is now trading at 4.5 times book. It bottoms at 1. The bottom of the cycle, it's 1. It was $45. It's now $250. Seagate, lovely memory storage company. Brilliant.
It has
was
done quite
brilliant
well.
at 60.
Yeah.
I said to everybody, it's going to triple. They said, don't be ridiculous. I was wrong. You know what it did? Went up 5 times.
Look at that.
5x.
Brilliantly.
5x. Now, 5x since April. I mean, how much more do you want from these things?
No.
So you can't expect to make your money in these things anymore. But they are momentum. And, if there's something we've learned from this year, I think I told you this when I first came to see you in the summer. Retail is far more important in this market.
Yes.
So you wanted my thing for the year? So,
Look to the camera.
look to the camera. The retail ownership of the stock market has reached about 20%. That is different. That is what's different this time. 20% retail plus 40% passive means only 40% of the market is controlled by people like me who pay attention to valuation and old-fashioned metrics and not just momentum and is it going up. That's what's different this time. So you have to take that into account with all stock decisions.
So you guys are increasingly important now.
It's why Tesla goes up.
Yes, Tesla the cult.
It's
Tesla
grotesquely overvalued for what he does. But it's a hype stock. And it remains so. It's the largest meme stock. Meme stocks are supposed to be small, but Tesla is effective because the institutional underweight in it is the equivalent of people being short. It's the equivalent of a short because all the money follows. The passives buy it because they just do, and the
because
retail buy it.
they can't not be in the
They
party.
can't not be in it.
Yeah.
So it's not based on fundamentals. It's based on money flow. That's what's happened.
And Elon Musk is so clever to understand that because, his taking over of X, which used to be Twitter, means that he has his own broadcasting.
Well, he's got that. He's now gonna hype SpaceX. I mean, remember they keep moving on.
Yes.
They're not selling cars anymore.
No.
They don't get tax credits anymore.
No.
I mean,
There was
honestly.
a humanoid as well, somewhere in between.
Oh, there's a
That
robot.
humanoid.
He's robot. He's nowhere in robots. He's nowhere. This robot won't do anything. There are far better ones from Japan and China.
I'm
So
hoping to go to some of the factories in China next year.
you are. Well,
Yes.
there we go. That's where you'll see
Unitree.
great robots.
Unitree, apparently all being used in manufacturing already. The next phase, which I'm looking at, is when it comes to the home. We see it on the street, right? That's going to be like another 10 years out. We're still on the iPhone 1, right? Or even before
exactly
that.
right. Exactly
But
right.
it takes time. Lots of questions coming now to the fore, asking about our Sachs, asking about what do you think about BMW? in that
Well,
group?
look, it's the same.
it's been
the
beaten
same
down,
trade.
hasn't
It's
it?
the
Yeah.
same trade. What BMW doesn't have quite as much, actually, it does sell in the US. Probably BMW works as well. I think BMW has outperformed though. I'm pretty sure that BMW has done rather better than Stellantis. Stellantis has been in a real mess. But no, there you go. It's a very similar chart, part of the same group. Can't disagree. I feel that the car industry has had a weight lifted off it. That's basically.
Interestingly enough, we've got quite a few people, Mango, hey Mango, and John asking about cannabis stocks. I wonder if this is down to the fact that there's all this mood music about it becoming, we may have this like a perennial story, right, in the US, whether it's going to become legalized or not.
Legalized.
Yeah.
I've never really got involved with cannabis stocks, apart from telling people to sell them aggressively when they all came public and they were all crazy. But, oh yes, by the way, I was about to say, my Aurora is not Aurora Cannabis.
Nice. We got that.
You got that. Mine is Aurora Innovations.
Yeah.
I don't know.
is another
I
one.
really don't have an opinion on cannabis stocks because I don't follow them. They seem to, there we go. Look at that.
That's the monthly there. Let's have a look at the daily.
So it's just up on some news, obviously, that something's going to happen. It's not my area.
It's very, very volatile, as you heard.
Can't
us
help
say.
you on those.
Right. We are almost out of time.
Oh, I've got something for you.
Oh. Okay. Is
Because
this?
it's Christmas.
I like surprises, but is this scary? Is it?
Obviously.
Oh my God.
It's Funko. It's Funko Pop. And there is K-pop Demon Hunter. That's Mira.
Wow.
Rumi, Mira, and I can't remember who the third one
This
is.
is the best present ever because I want to watch Demon Hunters during the Christmas period. I have already put, especially since, when is it? Was it the church that said it's not aligned with Christian values? Did you see that?
I did not.
Ah.
All publicity is good
Exactly.
publicity.
I thought immediately you've just increased the attractiveness.
There you go.
So very quickly,
Funko.
yeah.
It hasn't done anything yet. It's one of the few names that I've come on and talked about which has done absolutely nothing.
And I said
Sorry.
here, it's too fun. The
It's
chart
too funky
is
for
too
you.
the
There it
funky
is.
for me.
The story on Funko is they have the rights, those things there. They sell K-pop, those pops, Funko Pops, they don't have to just be Demon Hunters.
This is my first.
There you go. They've got a new one out. They've got Liam and Noel Gallagher on, for example. You can get them. They'll have the Stranger Things, the latest thing.
Yes.
Remember, it's run by an ex-Netflix merch guy now. So their relationship with Netflix is very tight. The stock is trading as if it's going out of business because they got into terrible trouble. As orders got cancelled, tariff hit them. The story is if Christmas comes through, and those things I now see are selling on Amazon, on The Entertainer, on Very, they're all over the place. And people tell me they're all over the place, and they're selling. I also saw Mattel last week, who just said they're going to be doing stuff as well. They've done pre-sales of Demon Hunter stuff, sold out, on pre-stuff that they can't get till next June. So the Demon Hunter thing is with us, and Funko plays into that. But the stock won't do anything until we hear their Christmas numbers.
Interesting.
So, but if it does go, there's a massive short position in it too. So
When is it reporting?
it'll be
When the Christmas numbers out?
Yeah, there'll be. I mean, they may make a Christmas sale thing, which of course will be in January sometime, and then we'll get their numbers late Jan, I think.
All right. So here's a bit of Ange research bonus for you.
Okay,
I do like your thesis, but as I said, as a technician,
it's not there yet.
it's not there yet.
Okay.
It's a bit too funky for me.
Okay.
Right, trader friends, you listening up? So I do my own research.
Shoals.
When I was up, we'll do Shoals in a minute.
Shoals.
But I was thinking if I wanted to take a position on that thesis rather than Funko, I was looking at Pop Mart because I went to every Pop Mart available known to man in Southeast Asia when I was there. The queues were crazy. I mean, you could not get into the store to buy stuff like this. You could not get in.
No,
it's a queue. It was like some Disneyland queue. And so they're even talking about potentially a listing in the US. But whether or not this comes to pass, I don't know. But I am waiting to see if it does manage to pull off because it is.
This is Labubu, isn't it?
Yes.
Yeah.
Yes, Labubu. And my mini analyst, my daughter, as you know, because I've run her through your thesis as well.
What did she say?
Yeah, I pushed her into the store and I said, what would you prefer, a Labubu or one of these? And she came up with a Labubu. So.
Well, now she's got one of those. Maybe she knew she was going to get one of those anyway.
Why? Right, Shoals, that's quickly.
Shoals. So, Shoals downgrade yesterday. That will be, yeah, I did see that. I'm not too concerned. It's a delay that I actually had a meeting with the company. I got them on the phone and we had a chat. They are guilty of over-egging the sell side ahead of time. The product is still in line. There's the downgrade. Actually didn't, it hasn't crushed the stock. I don't mind that. We'll take a downgrade, we'll move on. Then they can outperform. We are still waiting for qualification to come through on the data centers. It is a next year story and it got a bit ahead of itself. Still very happy with Shoals, still think it works. First solar, solar continues to climb and these guys, if all the power thing, and I told you about aluminium and all that, and people outbidding power, you're going to have solar, you're going to have Shoals, and then they're going to put this into data centers. So it's just a little bit ahead of itself.
There you have it, Shoal's plug and play in the power place, connecting solar panels, batteries, and all manner of energy items. Thank you so much for being with us and for my early Christmas gift.
Happy Christmas, yes.
Yeah.
That'll be it for Christmas.
That'll be and all his Christmas gifts to all of you as well. Do your own research. This is not trading advice. And of course, make sure you have your position sizing correct as we head into the new year. Thank you so much, and thank you for watching.
Pleasure.